Good morning, Central. You can hear me okay. So, what is this all about? It's all about obviously the election stuff, but I'm telling you, it's all the selling rumor, buying news when it comes to the Baidus of the world, the First Solars. So, we were long First Solar chart patterns mastery. We're up about 4 points. And you see, we sold 3/4 of our position. So just to let you know, the way we're looking at the markets is not worrying so much with the Fed. We tried to do it something about markets reverting before the Fed, but for after the Fed, I thought I'd go over historical stuff. So number one, we were not bearish on bonds at the moment. So just to let you know, not bearish on bonds, maybe long term still. And so I thought maybe we should go over that. And what do I mean by that? Well, the first thing is, what does the administrations of either one do to bonds? So the first thing to notice is the bond market has gone down. Why has it gone down? It's gone down because people are worried about deficits. It's extremely rare for our country, the US, to increase deficits in an economic expansion. They usually increase deficits when the market, when you're in a recession. So now you're talking about increasing deficits even more. So you put yourself in a real pickle because if you decrease the deficits now, you cause it a recession. If you increase the deficits, you're going to make the bond market go down, which is exactly what's happened. So just keep in mind that everybody was worried about the bond market or yields going up, 30-year bond going down because of the increase in deficits, because that means you have to sell more bonds to pay for the deficit. The other thing that worries is China. So, and what are you watching? I'm telling you, these correlations are working. What am I talking about? The whole thing of people worried about a Republican administration increasing deficits. And I'm saying this is what traders are perceiving. I'm not saying me, I'm saying on how traders seem to be reacting. And the way they're looking at it is if China has a lot of tariffs. So, what's it bad for? This is why we're short Darden restaurants. Tons of tariffs could hurt the consumer. And sure enough, Darden and Eat, we're short Eat. This is ridiculous. Yeah, it could hurt the consumer. This is also traders' perception. But the thing about it is that when you're worried about China and worried about tariffs, and keep in mind the way I'm looking at it, China owns a tremendous amount of our bonds. They also participate a lot in our bond auctions. That's all you need is a big trade war. So this is what I was watching. I was watching the polls and I was watching the widening. And when you saw that, you saw the bond market have a rally. You saw the Chinese stocks have a massive rally. You saw First Solar have a big rally. When the polls narrowed, you had First Solar sell off, bonds sell off, China sell off. So you have Trump win, and of course, China sells off, First Solar sells off, and bonds sell off. But I want you to see what's happened today. If you don't think these correlate, go and put in a three-tier on Thinkorswim. I mean, on TradingView, we're going to take off this. So we're going to go and make this all the same. And we're going to take a 5-minute chart. And we're going to take China on the left. Let's just take Baidu as a good proxy. So Baidu way up. So what is the bond market doing? Way up. It's not a coincidence. And what's First Solar doing? Way up. Isn't that amazing? So I'm just telling you, and what happened with the election stuff? Baidu down, bonds down, First Solar down. That's not a coincidence either. Look at that. So I'm telling you, so number one, this is time of year small stocks go up. Don't get me wrong. That's why we've been long small stocks. We hedged them with the XSP, which has worked okay. Not as great as I wanted because a lot of the small stocks I wanted to buy went up even before earnings. I really don't like getting in before earnings, but they exploded on us anyway. So ABSI, we did fine, and we're some in other ones. So that's one thing. And I think the small stocks should go up no matter what. So I'm not going to bet on the Fed. The Fed markets can go up for longer than you ever imagine. But I'm just telling you, I would watch this. Also, whether it's a 5 minute, 1 minute, 15 daily, I'm looking for that type of pattern to buy something. We call that a Stewie pattern. Stewie pattern because of this. In fact, I'm going to take this and I'm going to put drawing some stuff for you. This is just an inverse head and shoulders. The key, and I know you've seen 8 million sites where they say buy on the way down. We like buying after a development of a bullish pattern, not on the way down. We like buying on the way up. So, just keep that in mind. That's what we're watching in here. So, and you see the little inverse head and shoulders. Now, the key with any kind of inverse head and shoulders, so that I sort of earmarked it, a Stewie pattern. Because if you are a little creative and you've had martinis for lunch, if you highlight, it looks like Stewie from Family Guy. So that's being pretty liberal with your imaginations. But there you go. Now, there's a lot of caveats. One of them is when you see a Stewie pattern, you want it to have lack of resistance on the upside. As you see where the bonds stopped. They stopped in the resistance zone. The ideal pattern is when something has formed a long thing like this and there's no resistance overhead. So just keep that in the back of your mind. You don't have that now. I'm just saying that's what you're looking for. So that's what you're looking for. And you see it. You see it in CRSP. Go look at this on a 4-hour chart. There's your Stewie pattern. We're long it. Your Stewie pattern, where's the resistance? Well, ironically, where it stopped. But ideally, in this type of environment, you could get it to go and fill that gap. So it's always a resistance zone. So I just can't impress enough. Prior bottoms become resistance. Prior bottoms and tops become support. So just keep that in the back of your mind. I've seen, and I'll tell you, I know a lot of people use a 21 EMA. If it works for you, great. I've just seen that in a trend, whether it's an ATR trailing stop or a 20 EMA are in here, it helps a lot to keep you on the correct side. So usually what happens is when you get a rally, whether you use what I use, an ATR trailing stop, and everybody has a different way of doing things. The key is to keep in the correct side of the market. Because in here it waffled, no doubt about it. But the key is if you're a computer, all you're going to do in here, I use that ATR trailing stop. When it got above it, that was it. If it got above the 21, you had a lot of fake outs. But once it started going, sure, you could ride that. If you're a computer, you buy here, you get stopped. 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 You buy here, you make a ton. So here you probably futzed around and lost 10 cents. Here you made $30. So yeah, it's all about trends and staying in the trend. So just keep that in mind in there. That's why I like the ATR trailing stop intraday better. On the way down, if I want to buy something, number one, I need to see support. And number two, here you go again. I want to see a Stewie pattern. As you see, it worked again. It's not a one-off. Sold off, you developed a bottom. You developed a bottom. You didn't try to pick a bottom. You didn't buy on the way down. It developed a bottom. Then once it started going your way, look at that. ATR trailing stop and the 20 got you out. That's a good profit. Now, usually when I see it start to turn, I will use a shorter term, like a 15-minute, to get myself out. So when you got this big old, there's your inverse head and shoulders right here. In fact, I like buying on the break. So if you buy there, you might say, well, where do you get out? And this is a big deal. This is how you make a lot of money in the long run. So how do you get out? Well, number one, you determine the longer term trend. So longer term trend in this was no bargain on the upside. Number two, you're going to have resistance all the way up. It's a resistance zone. So let me show you a couple of ways to play it. So CRSP, number one is the width of that. That's your first objective. The resistance is also your objective. When you see it get to your objective, you have to go to an even shorter term time frame to stop yourself out. Now, I know I went even higher, but I'm talking about this move. That's a tiny move. It's 2 points, but I'll show you on how we did it. So I'll just show you. Rectangle. You see the rectangle. So you take the width. Just take the width. Let me get it up here. Now, you could nickel and dime about those little twerks to the downside. I'm just taking sort of the meat of it. Now, that's only a point. We're talking about a day trade. So if you move that, what's a point? Right where it stopped, close to it. I'm just talking about a short-term trade. So when you see it this, and you see this resistance, you better go to an ultra short-term chart to stop yourself out. There's a bull flag. There's a Stewie pattern. Where's your resistance? Right there. What's your objective? That amount. I'm telling you, that stuff works. But when you go back to this, right here, you got to tighten your stop when you're up near resistance. So where would it get you out? It gets you out here. Yep, the 21, or I did the 20. You could do 21, either. The key is it got you out in here. You made this break to there, $1.50. That's all we're saying, $1.50. That's pretty cool. So I'm just telling you that combined chart patterns, combine these. So if you want to use a 21 or an ATR trailing stop, that's fine. And sure, it keeps you in and gets you stopped at pretty good prices. The only thing that I see a lot of people make a mistake is when stock's going down, they buy just because it's at a moving average. On the way down, I found that it's not moving averages that work. It's price support. So just keep that in mind. At least that's the way I do it. So let's fast forward into now with CRSP. So here's CRSP, and where did we get in? We got in on this, right in this area, right there, right there. Actually, we got in here. So let's go to a 15-minute. So where did we get in? We're still in. All right, we're still in. We got in right here yesterday. We got in on that little inverse head and shoulders right here. That's when we got in. Now, why did we short stock? I posted that we have a spread, but I shorted stock against our position because look at this spike and then go to an hourly chart, and where's the resistance? Well, you see it now. I showed it earlier. It's a resistance zone. In that zone, if you're in a longer term spread and want to stay in, you got to short some stock against your position. And that's what we did. So I'm short stock against our position. So just want to show you that. Now, second thing, chart patterns mastery. We're still in for solar. So did we miss down here? Yeah, I showed you this and I missed it. I'll be the first one to tell you when I miss something. We miss things all the time. So we're talking about this sell-off yesterday. There's a little bull flag. Then you got this. See what's developing? You're getting a little Stewie pattern on a 15-minute chart. So I'll show you what we're talking about. Talking about that little rectangle. So where'd we buy it? We bought it right here. So did we buy it down on the way down? No way. So just ask Chart Pattern Mastery if they're in the Essentials room. Where did I post the entry? Right there. So I tried to stick to my guns. So stick to my guns means you buy it when it breaks here, and it buys it when it broke the inverse head and shoulders. Right here. So Chart Patterns Master, if you're in here, you saw where we bought it. I'm going to take this off. So we bought this. I'm going to do a little annotation for you. This is where we entered. The long trade was posted. Now, where did we get out? Well, that's where it becomes a little financial. So let's say you bought 100 shares, because this moves, it can move 10 points. Let's say you bought 100 shares. Well, what you do is what's the objective and where's the resistance? So there's your first line of resistance. I'm going to put this. There's your first line of resistance. On the other hand, what's the objective of this inverse head and shoulders? So the objective is that 5 points, 5 points from the breakout, 5 points. So I'll just show you on how we did it. You're never going to make exactly your 5 points. Just keep that in mind. So take 5 points from the breakout. That's right where it is, right here. On the other hand, you had that resistance. So where did we first sell it? So just take this. I'm going to share this with you, just so you know what we did in the other room. There. Now that looks like a lot of lines. That's not that many. All you're doing in here is you're taking this, you're taking that objective, but you're selling half at resistance. That's where I posted we sold half. So we bought it at 194.68. We sold half right here. We sold another quarter here. And now we're still long a quarter. Still long a quarter. So now that we're playing with house money, where do you get out of the rest? Well, number one, what's a 1 minute chart look like? Doesn't look like much. What's a hourly chart look like? Hourly chart looks like if it gets over that, it has nothing. That's why we're still in a quarter. If something comes bad and it goes to 190, we're still up for the day. So we're still in First Solar. So the objective is first 200, the round number. Now, I don't know if you can take, when it's this far away, that resistance. But that's probably resistance. Right there. See that little candle? Right in that area. Probably resistance. I don't know if I can ride it that long. But that's what I wanted to show you. So that's what we're doing. So we're still long. Still long. Now I got a totally opposite one. So you know my theory about EAT, about consumers, that consumers are going to have a little tougher time if they're tariffs. Now that's just how traders are perceiving it. We're also combining a chart. This is the opposite. Darden Restaurant. This, not Darden, I'm sorry, EAT. This to me is an exhaustion gap. So now you don't know it's an exhaustion gap till it takes back the whole candle, which it has. We're short. We're short from all the way up here. So we have butterflies on, playing it to the support. So we bought them at 3.5. So I bought a lot of them. So I sold one at 4.10, I think. Took 60 cents out of it. Now it's probably higher. So good for us. Yeah, right now it's 432. So now you're not talking about a 10-cent option that you sell at 15 cents and you make 50%. You see it bragged on Twitter. I'm talking about a $3.50 option and you're trying to sell it at 430. That's a lot of money if you have a 4 lot. So I'm telling you, I'm going to go in right now and try to sell one at 430. Let's see. Right in front of you. All you got to do is take the midpoint and the midpoint. This you divide by 2. Multiply by 2. So 370 and 8. Yeah, I might be able to sell this. Not 482. I wish. It's this one. Yeah, 430. There you go. 430. So chart patterns mastery. We just made 80 cents. 80 cents. So just keep that in mind. Not bad. So in fact, let me actually go post that for you. Now, just keep in mind, I bought a lot of them, so I'm just selling a portion. There. So chart patterns mastery, I sold a portion. So just so you know, I bought a 6 lot. Now, somebody yesterday said the stock doesn't seem to be selling off. And then about 5 minutes later, it started selling off. Remember, like I said, with a broad market, you see a rally, you see a test of the high, and then you can draw a defined trend line, which it broke. So just keep that in mind. That's pretty exciting. Broad market, I expect the same thing, but I don't know from where. I know that sounds glib. I don't mean it like that. So just to let you know, election excitement, that's fine. Do you see any rally, sell off, rally, and a defined trend line? Not at all. That's how you get yourself in trouble trying to anticipate that. But let me just tell you, you go back to 1980 and you go to when Reagan, give me 1 second. All right, so you go back to Reagan. So we know Reagan was pro-business, no doubt. On the other hand, the interest rates are going bonkers, made his job extremely tough. And keep in mind, he was surrounded by Nobel Prize winners and all that, but they couldn't get inflation under control. So even though he was extremely pro-business, the stock market wouldn't go up. It went up here, right when he got elected. For about a week, it went nuts. And then it went down for a year and 3/4. Year and 3/4. Went down 15%. In fact, that's only the beginning of it. Like I said, new high, sell off, test the high, define trend line. So you see it's 142. Look where it went in August of 82. 103. Yeah, went down 35%. Why did it start going up? Because then Volcker cut interest rates. Interest rates were going bonkers. So if that sounds familiar, pro-business president, definitely pro-business. Definitely an excitement he got elected. And the bond market getting torched. Just keep that in mind. That is not a coincidence. Well, it might be a coincidence. Maybe it's different this time. But just keep in mind the bond market did this when the stock market got all excited at the beginning. That does not mean to short. Like I said, this is when you look for the short. The high, and then you can draw a defined trend line. Defined trend line, defined trend line. You go back to 2000, defined trend line in the SPX. Fast forward to now, no defined trend line, straight up. Now, I know a lot of people think if you go straight up, that means that it's got to go down. Nah, not necessarily. Just keep in mind, 1980, it did go straight up. Went straight up. Right here with the election, straight up. Yeah, about 6%. But then it formed a trend line. That's what you're looking for. In the meantime, you can try to make money on the long side, no doubt. So chart patterns mastery, we're still long for solar. We're still short EAT. We're still long CRSP. So we don't have a lot on. So just keep that in mind. Anything we had on as a hedge, we lost in. The longs we made in. So that's where we are at the moment. And keep in mind, a bear flag is against support. Against support is not to be trusted. Number two, the longer a pattern looks like a bear flag, the less reliable. The bear flag, weekly bear flags hardly ever work. This is on what you're saying. Is that against support? A bear flag against support is not to be trusted. Just keep that in mind. So, bear flag, no support. Yeah, that was a good one. Bullish rectangle with no resistance. That was a good one on the upside. Could this be a giant top? It could be. But I'm just saying a bear flag is not to be trusted when it's against a ton of support. So, I mean, that's the way I look at it. All right, just to let you know, real-time chart patterns mastery. Where the heck do we get out of the rest of First Solar? I'm getting close. I want to give it a little more time, but you got to be out if it breaks that. Now, we could go to a farther out chart, a 5-minute. I don't feel like waiting for 196. On the other hand, it might go to 200 first. So probably right here, 198, and I'll be out. Now, we only have a quarter left. Maybe I'll make it 197 in here. But, that's a good trade, about 3.5 points. We'll just stay, and so far, so good. EAT, if you shorted stock instead of doing a butterfly, that worked for you too. So just keep that in mind. Yeah, chart patterns mastery and also central room for that matter. Here you go. Let me go put this in here for you. I just sold another at 440. So not bad. So, and just to let you know, I bought a lot of these. And like I said, there's a big difference between buying a $10 option or buying a $3.50 option. So you make a point on a 6 lot, it's $600. You know, you make a 5 cents on a 6 lot of a 10-cent one. I don't even, you're making $30. So just to let you know, I'm out of half. Out of half. Had to take my profit. So not bad. So hope you were able to participate in that. So, but that's a 6 lot. Now it's interesting. You can go into here and you can see the open interest to see if anybody else listened to me. So open interest updates every night at midnight. I had a 6 lot. Not a lot of people did these trades. So like I said, I bought a 6 lot. It was down to 250 yesterday. It was down $600. Once it started turning, I knew I'd probably be right, but I wish the broad market looked worse. That was a big problem. So that's where we are. So far, so good on those trades. And CRSP is still working. And now, for solar, do you use that moving average? Let's just go and look. So I have in a 20 and a 9 because I know a lot of use 20. You can definitely use 20 on the way up to stop yourself out. As you see, it's pretty far from the ATR trailing stop. I'm getting out. I'm getting out right here. So First Solar, I'm going to be out of the rest. Just to let you know. First Solar, going to be out of the rest. Take the good trade. And if it starts looking good, I can always get back in. There, 14. So for chart patterns mastery, I'm out. Flat First Solar, 194.68, 198.14. There. So you made money in CRSP, you made money in First Solar, you made money in EAT. The only turkey right now is XSP, and I'm not sure you're wrong in that yet. So of playing that in to get out right before the Fed. So far, so good. Like I said, if you think I'm the only one that looks at these, yeah, you probably had a stop order there. On the way down, where do you think it stops? It stops right here. So I'm out of First Solar. So good trade if you're watching this, Essentials Room. These are good trades. I think they're good trades. So making money is you make a point on a 6 lot, it's not bad. And also, I want to show you another thing sort of interesting. I want to show you about deltas. So this is another thing that we go over. I traded on the floor a long time. So I'll show you what we mean by deltas. So here we are in EAT. So we're long the 120 puts, we're short twice as many 110 puts, and long the 100 puts. Delta short, because this delta is more than twice as high as that delta because it's out of the money. So if this stock's 116 like it was on the opening, you're really delta short. You can always buy a little stock. Always buy a little stock if you feel like it. Once it goes under 110, ironically, you're delta long because your short put has a higher is times 2. So just keep that in mind for hedging purposes. So right now, where could EAT go? I could go where I thought it would, which is 110. Good for us. Remember, exhaustion gap. You don't know it's an exhaustion until it takes back at least half of this. Once it took back half, I thought we were going to be fine, and we are. So, chart patterns master, I just sold another. I had a 6 lot. So, I'm just going to let me put it in here. I got to put it in here. I don't feel like hearing anybody's voice. Give me a second. There. So, good trade. Good trade. I'll take that any day. So, now the next thing. Now that you have the Fed coming out, a lot of times what we do is look for things already selling off and play them and get out right before the Fed. So just to let you know, one of the things we look at is this. Brinker, by the way. So I had 6, I have 2 left. So I might let one run. That's when you buy 6 at 3.5, you're talking about $2,100 on a put fly on a stock on the way up. So, you take $600 out of it, you take your $600 and be thrilled. So that's where I am right now. So you had a good long at First Solar, good long at CRSP, good short in EAT. And that's what we have right now. Like I said, if I go and lose $60 in the XXP but make 600 in EAT, it's all about position sizing. One of them's a cheap option, one's an expensive. It's extremely nerve-wracking, but it worked. So that's where I am. And by the way, Chart Patterns Master, I hope you're doing some of these trades. Just hope you're doing some of these trades. Or let's put it this way. I hope you're doing all of the trades. Net, they come out ahead, but you got to do them all. So right now, When you look at a daily chart, this is going to look like that. That is not going to look good. This is going to look like an exhaustion gap. This could easily go to 110, and it's really overbought. But it can stay overbought. It was overbought here. So I'm just telling you, that's what we're in. So far, so good. So that's where we are right now. Just to let you know, Chart Patterns Master, I kept one. Now you worry about it going to 100 or let's say getting taken over. So you got to use the house money. I'm only in one left. I'm only in one. Now you might be like, why didn't you just cover the 110 puts on the opening? Because I didn't know if it was going to 120 first. So just keep that in mind. So that good trade. And now I'm in a one lot. I can breathe. So that's what I'm in. So that's where we are. So we made money in EAT, we made money in CRSP, we made money in First Solar, and the only thing we're down into is XSP, and I just got out. We just don't need it. We don't need anything. We can now reevaluate. Now, let me just tell you, I'm looking at a lot of long ideas. Some of them I've missed, like QURE. That's the one I regret the most. I like that stock, and I missed it. There's a lot of companies coming out with earnings. You got to look for the inverse head and shoulders after earnings, even. So you're not going to get the bottom. So the problem is a lot of the longs I like still have earnings coming out. So I got to wait for the earnings. And let me show you why. Does this look good on a chart? Look great on a chart. But I couldn't buy it until earnings. That could wipe out your whole month. So just so you know what we're doing. All right, chart patterns master. I sold one of CRSP. So here you go. So we're trying to, this was a $2 one and we made about 20%. Let me put it up here. There. So these are pretty good ones. Like I said, don't get opinionated because of the election or Powell. We're trying to be creative. So we're out of First Solar. So I just let you know that. If we're going to play something later like an SPX, we want to see it look like this. We want to see that. That's what you're looking for. You don't have to play Amazon. I'm just telling you that kind of idea. So the rally, the test of the high, and the defined trend line. And then respect the break in either direction. If that's a one-off, it isn't. Eat. Respect the break in either direction. As you see, it worked. And this is going to work up and down. And that's how we're going to continue to play things. Up and down. Don't be opinionated. That's the way I look at it. So far, so good on a lot of these trades. Now, don't get me wrong. If I see later, if I see that the SPX forms this, I'm a lot more excited about playing it to the downside. Not now, but later. So just keep that in mind. Now, and I'll just show you what we're looking at. I'm not saying buy any of these. I'm not saying sell any. We're looking for a certain type of pattern on a daily chart or a 4-hour. We're looking for that inverse head and shoulders action. That's what we're looking for. So if you want to do it a different way, this is just on FinViz. I haven't even logged in. Remember, this time of year is usually strong, even though, like I said, be careful of what happened when bonds got killed and the stock market was excited about an election in 1980. But in the meantime, this is what I do. I take a screener. Just go to FinViz. Take everything X funds. Now, you don't have to take optionable and shortable, but I usually do. Then average volume. I want it over, let's say, 300,000. If you try to buy 1,000 or 2,000 shares of something that's traded 10,000 shares, that's unrealistic. So as you see, this is going to be a lot, 2,600. So I want small stocks. So I'm going to take between 5 and 50. Well, these days, I think I should take between 1 and 20. 1,000 stocks. That's a little rough. But I want the ones already turning the corner. What is your definition of returning the corner? Let's say over the 50. I like to determine if something's in an uptrend. 600, that's a little rough too. That's a lot. But you could do it like this and just go through them. You'll see some look a lot better than others. I don't know about the dollar stocks. I go into start at the threes. I'd start at the threes. There's one right here. I'm actually really interested in that. See that? Now, it has pattern recognition that you could try to use. I haven't found it work really well. But you see some of these look a lot better than others. Maybe that. Now, let me just tell you another thing. When you see a stock have a gap down, these patterns are less reliable. And let me just share this. I know it's a lot of stocks. I'll be going over all 600. I'll be going over all 600 for our subscribers and try to find good ones. I mean, you could just go through. You see some of them look a lot better than others. There's a Stewie pattern right here in 3D. Right there. But that's the kind of stuff I look for. I also look at news on these stocks. ACHR we like. Except they have earnings coming out real soon. But I like that one. I mean, you see what it looks like. See the turn? And then go to CRSP. See the turn. So at least you see where we're coming from on these. So that's your homebrewed research. So your goal is to find these type of turns with not a lot of resistance overhead. In fact, what time is it? Yeah, I got 5 minutes, 6 minutes. I'll just show you some. I'm not saying recommend them at all, but I'm just showing you what we're looking for. You're looking for this turn and lack of resistance. Now, because the market's gone nuts, I'd go for the stocks that are cheaper because the advanced decline still stinks. So there are a lot of stocks that haven't gone up yet. There's one. Well, this is a garbage stock, but still, look at that turn. I had to say that they're in the garbage. But that's the type of market we're in. The turn. So what happens is you get a lot of damage on the downside. You get the first rally and then a consolidation, and that's a cup and handle. And that's what you're looking for. So now, don't get me wrong. The markets could sell off after Powell. No doubt they could sell off after Powell. But you got to have a lot of long ideas in your hip pocket. That's all I mean. And this, heck, I'll just go put it on the long ideas. That's what I'm doing in the background. And you'll see some of these look great. Real look good. But it gapped up. You didn't get much of a chance. LX looks okay, but it was just a $1.50 stock. It's also China. You got to be careful because of geopolitical risk. Remember, I told you not to trust if something gapped down but looks good? Perfect example, CLDX. Let me be sure I have the right stock. CDLX, sorry. Remember the gap down? You can't trust a breakup prior to earnings and a gap down. You just can't trust it. So you got to be picky on these. So I'm just telling you, that's what we'll be building. And then we're going to, I wish I had more time. We're going to try to find cheap options that go with it. So cheap options means something close to the money that don't have any premium for December? How about Prime? There, that looks really good, but it has earnings. It's just brutal. I gotta wait. And a lot of these are rallied because everything's rallied prior to earnings. I hate chasing into earnings. That's the problem. But that one will be on my list. In fact, I think it already is. But that's how I'm doing it. Look at that. KC. Yeah, that's a China stock for you. Wow. But that's what happens. You get little resistance on the way down, it hits support, and on the way up, it's just like it's air. CRDF. Yeah, it had earnings coming out. I didn't touch it. That's a perfect example of a cup and handle. So I'm just telling you, there's a lot of them that probably haven't gone up yet. And those are the ones I'll attack after the first sell-off. And that's where I am. Now, don't get me wrong. If Powell comes out and disappoints and the markets get torched, I still like long ideas. But you got to buy them near support. I'll show you a perfect example. I just saw one. OSUR. Here's a perfect example. OSUR. There. Came out with earnings. It sold off right to support. But ideally, you want to buy it with that. You don't want to buy on the way down. You could, but it might take you a while for it to work. So take care. Thanks for listening. I hope you found this